Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday the 19th of August. Starting off with the FTSE 100, which is stuck, I suppose, finding resistance between 83 and 8400. We've got support there at the 50-day line, currently rising at 8204, and hopefully 8200 will be the place which provides support for this market if we have to get down there. Otherwise, the other thing to note is that the RSI is at just under 56, which is actually a continuation on the upside territory, and hopefully that means that any weakness more than what we have at the moment will be bought into, and we'll head back towards trying to break 8400. That rising 50-day line also a positive. Moving on to the DAX, which reminds us what a volatile month it's had. Good to see the market now above the 50-day moving average at 18,200, and above that looking to break that resistance line there from May at around the 18,600 level. Upside, the best case would be the top of that rising trend channel from September, as high as 20,000 by the end of next month. On the downside, the worst probably at this stage would be that old April support line projection and the area of the 200-day moving average just above the 17,700 area. RSI at 56 as well, which gives us a good look in terms of the technicals. Moving on to the Dow, and here you can see the unfilled gap to the upside during the latter part of last week, a very helpful signal after the consolidation that we had around the 50-day line, 39,600. Next level of note is the July resistance line there at 41,100. Above that, we're looking for fresh highs for this market, up to 42,500 plus by the end of next month. But the key here is staying on the right side of the 50-day moving average at 39,600. RSI in a good place, just under 60, so that does bode well near term. On to Bitcoin, which has been the, I suppose, the difficult market amongst the major markets here. Here we've got this market basically in a no man's land, below the 50 and 200-day moving averages at 62,000, slightly below the floor of that rising trend channel from October at 59,000, and there's still the risk of a final retest of support at that late February, early March support line projection, 52,000, before this market gets back on the sort of upward trajectory. The other point to note is that we've had several failures of the RSI below neutral 50 up to 4 of those. And that would be a leading indicator on the downside, and it's certainly worth noting that at the moment. Moving on to gold, and gold continues to be quite heroic, one has to say. The solid close above 2,500 noted by people, and previously we were looking for 2,600 by the end of this month, now looking for 26 to 2630 by the end of this month, the way things are going. And ideally we stay on the right side of the support from Friday around 2490 in the meantime. RSI at 65, so not overbought yet. Moving on to the stocks, and starting off with Aminex, and here you can see that we've got a potential sort of start of a turnaround here for the shares. We've been consolidating for at least a little while over the recent past, but here it looks as though the shares are trying to bounce off the floor of that rising trend channel from back in October. All that's missing now really an end-of-day close through the 50-day moving average around 1.55 pence and above that. Looking for a retest of 2 pence, maybe up to 2.5 pence by the end of next month if we spike through that 50-day line relatively quickly. Ideally, we stay on the right side of the 200-day moving average, currently rising around the 1.3 pence level in the meantime. Moving along to a stock which seems to be squeezing higher, maybe against the odds given the time frames involved, but Cornish Metals doing rather well at the moment, breaking through the 50-day line for the sort of middle part of this month, and should be heading for at least the 200-day moving average around 6.8 pence over the near term. In fact, 8.8 pence, given the way that the 200-day line has been blocking the progress for this market for much of the past year. So the 200-day line, hopefully a magnet for the shares, while we're above the 50-day line at 6 pence. Corcel is next, and here the picture is that of an improving situation. The reason for saying that is that we've got potential broadening triangle base, and looking for this market to head up to that resistance line there, the triangle top there, as high as 0.2 pence by the end of this month. Obviously that ties in with that peak early in June as well, so quite logical. And given the way that we've broken the 50-day line and recent neckline resistance of 0.13 rather, feeling quite chipper about the prospects there. Stock which I've been going on about like a broken record in the recent past has been Goldstone Resources, and luckily the shares have obliged in terms of the recovery within a very steep rising trend channel, and one can see that that's been in place since basically the early part of May. Top of the channel there, heading towards as high as 2.8 pence or even 3 pence by the end of next month, with the big win in the recent past, at least the last 3 sessions, being the break of that 200-day moving average at 1.9 pence. Above that and the floor of the channel at 1.9, looking for up to 3 pence perhaps by the end of next month, which would be quite a result given the turnaround we've seen since the beginning of last month. On to Helix exploration with the gas shows reported today, and here we've had a spike towards 26 pence. Ideally the shares will be able to give us an end of day close above the 50-day moving average at 22.2 pence, and then head up towards the top of that rising trend channel from back in May as high as 32 pence by the end of next month. Ideally it would be sooner than that, but above 20 pence, looking for 32 as the overall look, or the overall perception there for Helix. On to Intercee, which has gapped higher today as well. Here you can see the shares within broken the top of that rising trend channel from this time last year. The upper parallel of that channel heading towards as high as 235 pence, and we're looking for that perhaps by the end of next month or even sooner than that, while we remain above £1.80 on an end of day close basis, basically the floor of today's gap. Taking a look at Kodal for the first time in a long time. Obviously the shares have been regrouping, or at least retracing from the 0.65 area since the beginning or the end of May. In fact, the hope here is that we'll find support at or above the floor of that, floor of that rising trend channel from November, but also the 200-day moving average at 0.45. While we're doing that, then we still have the prospect of heading up to 0.7 again by the end of next month. Early days on that, but the bounce above the rising 200-day line rather, and the gap through the 50-day and 200-day lines back in May, giving the chart a decent look. Moving on to Kefi, which tends to be something of a problem child, well, it has to be said, but here, what we have here is a gap fill rebound, so filling the gap there from back in May and bouncing above that. That does suggest we may have another chance at 0.7 pence, if nothing else, over the next 4 to 6 weeks. But the key there is no end of day close back below 0.55. Novacyt is next, one of the best calls here in the recent past, and probably one of the best calls ever given the lay of the land. We were looking at this last Tuesday, and obviously it was at and around the 50 pence level then, and since then we've obviously basically doubled, and looking for this to be the run-up of a golden cross. The 200-day line was already rising last Tuesday, hence the call, the bullish call, and we've got now the 50-day line rising, so we're probably a week or so away from a golden cross buy signal. The run-up to that tends to be the strongest part in the cycle, and obviously that has proved to be the case here. In terms of potential further upside with this stock, obviously a play on the MPOX situation above 105, which was the the second target there, third target in fact, then looking for the shares to basically retest the old 2023 resistance zone above £1.20 is the best case scenario. But the key here is probably staying above 105 on an end of day close basis and not going back below the old resistance there around 93 pence from the beginning of last year. Moving along to NEO, which had a great week last week, and looking for the shares to regroup and deliver another good week, basically bouncing off the old resistance area from the beginning of the year, near 0.8, and heading back again. Still looking for 1.2, and obviously got the listing level at 1.25 as the next target there for the shares to deliver on. Onto a stock which I see a lot of people looking rather smug about at the moment, Resolute Mining. Interesting look at the chart position here, which is a rising trend channel from December last year. Top of the channel there, heading for 46 or 47 pence, looking for that by the end of next month, given the unfilled gap to the upside today, and the gap down for the start of August, giving this the look of a bear trap island reversal, one of the strongest setups around, so there could be more on offer there from Resolute. Onto the poetically named Windwood, and here we got a very strong rebound through recent resistance around the 107, 108 pence area, and above that looking for the shares to hit the top of that rising trend channel from this time last year as high as £1.55 by the end of next month. A very good look to that chart at the moment. Finishing off with the stock which is looks like it's finally back in business for the bulls. Here we've bounced again off 0.7 pence, and looking for the shares of Xtract to hit the top of that broadening triangle from April, size 1.05 by the end of next month, or hopefully a bit sooner than that. But the key here is holding on to that 0.7 zone. That's it for me today. More updates tomorrow.